Hey everyone, welcome to the first video of this YouTube channel. Today's topic is about supply and demand zone. How do we use them? How can we spot them? And how I myself think of S&D zones like the game of Arkanoid. You have a ball, and within the ball, it just hits between blocks, and it goes back and forth, back and forth, back and forth, just like the way you see in this clip. As you see in the clip, you see a ball just bouncing back and forth between blocks. But now think about that in an actual chart, in an actual market, and think of the price like the ball, okay? So let's just draw out zones like this, a red zone, a green zone, and now we have a red zone in here. Now we have a little green zone in here. And now we have something like this, okay? So the red zones are supply zones. The green zones are demand zones. So as you may see, the top is the red, the green is the bottom, which is demand zones. And now think about, again, the game of Arkanoid bounces just back and forth, back and forth, back and forth. But now think of this, with an actual price, with actual structure, and just going in between these levels, okay? So let's just say that the price itself, which is structure, we have something like this, a movement up. But actually, let's just change that color. Okay, there you go. So now you have the high, the higher low, higher high, higher low, higher high, pulls right back down into an area, falls back even further, and then comes up into a red zone again. Within the red zone, comes up into a green zone or into a green zone and starts giving you a reversal, find its creek. When it finds its creek, it continues going up, and when it goes up, price just delivers to the upside. And you can see that based off of what you see from left to right, where is the market heading to? It's heading to an uptrend, right? That is what we see, right? Because all it's doing here is just being printed, new structural highs, and within new structural highs, that is telling me that this market is bullish. And so as you may see here, what's more effective, supply or demand? In this case, since it's rallying up to the upside, it's demand zones. Demand is greater than supply, okay? So as you may see here, right, now we can have our structural points that came from this low, came from this high, came from this low, came from this high, came from this low, that made a new higher high, higher low, higher high. And you can see it's like when you draw out these S&D zones, it's like it really comes from structure. Within structure, that is what we want to follow along with, because structure is telling me that it's rallying up to the upside, it's just making new highs. And if it's making new highs, the structure alone, what creates its own S&D zones, because the structural play here is bullish. So as you may see here, it's like on both areas, there is sellers and there's buyers. Sellers, buyers, and then you can see the buyers have broke above the red zone, and now just created its own structural points. And so if that right there is a bullish, then I can continue on being bullish. And so now it's like, now that we have this higher high, this higher low, and let's just delete this for a second. And now you can see that it's like once price continued, gave us a nice move to the upside, pulled right back down, made the new high, you already have what? Your structural play, right? Your structural play is bullish. And with the bullish, it's like now we're applying, right, the structure, the S&D, and now your confirmation, okay? That is what we're going off here. So what we see here, based off of the context and the range and the trend that we're holding, is we're running up. And so since price is running up, you can see that we have a breaks of structure here. We have a higher high, price pulls back down into an S&D zone. Within those S&D zones, this is the area where you want to confirm to take price higher to take out the liquidity that sits above here. And you can see it's like structure, it's like what pretty much controls or creates your S&D zones. And within those S&D zones, that is the S&D zones that we want to trade off of, because we want to connect with structure. We want to, structure is telling us where is price heading to. It's heading to the upside. And so if price heading to the upside, or if the market is rallying up to the upside, then I want to participate, or I want to engage myself into that run up. But I want to see on how can I look for the break, look for the retracement into the S&D zone that was being created off of the structure, and trade off of the S&D zone, which is the demand zone, to expect what? A bounce, right? And so as you may see here, it made a higher high. So let's just type in a higher high, higher low, and higher high. And now it's like all we know at the moment is that we have three structural points here, right? You have your higher high, higher low, higher high, pulls right back down to create its potential higher low, because we can't confirm its higher low until price breaks above. But that is just what our job is, or our duty, or a task on lower time frames, to confirm in this range, to see a shift in price to continue going higher. Because in some cases, when you have a higher high, higher low, higher high, this is the S&D zones that we want to trade off of. But in some cases, price might just come into here and just give you the rally to see no higher prices. All right. Or price might just pull back, pull back, pull back, pull back, run up, run up, run up, and then just fail. And your whole bias has just, been flipped. And, again, it's like, even though that you have all 3 steps or 2 steps, looks perfect, you have a higher high, higher low, pull back into your S&D zone, that does not mean it's guaranteed to hold and to start seeing higher prices, because it can either be it can be a hit or miss. But now let's actually look at that in an actual chart and see on how we can look at this uptrend and see on how we can follow within structure, because structure is telling us the overall direction. And I want to follow what structure is giving me, and I want to confirm within those ranges and continue. Okay. So let's delete this and let's look for a rally up. Okay. All right, perfect. So let's just choose right here. So this is the 3-hour time frame on USD CAD, and within USD CAD, we have an overall uptrend. Doesn't really matter what we see in the far left, but again, this is just what we see at the moment. And let's just choose this area. Okay, so we have a nice consolidation, which is this is an overall Wyckoff schematic, but we're not talking about Wyckoff today. But the way that we saw high, the low, the impulse move, you had a breaks of structure right there. So let's put in BOS. Okay, perfect. Now you have a breaks of structure. Okay, so now that you have the breaks of structure, you have some sorts of demand zone. And as you may see here, price did not come into your demand zone. And so it's like, even though that you draw these S&D zones, it's not always the case like it's going to bounce into your S&D zone every single time. But that's fine. It's like, let's just continue and continue until it gives us a retracement into an S&D zone. All right. So price continues going higher, breaks of structure again. Now you have, okay, the last down move before the up move, S&D zone, price did not come into the S&D zone, and that's fine. And let's continue. And so the more that continues higher, then, these S&D zones that we just drew out doesn't really matter to us, because structure is what's telling us that it wants to continue, right? So these banks want to continue on taking price higher. So now that we have a consolidation, a run up, a pullback in an impulse move, that is another breaks of structure right in that area. And there you go. So where did this high come from? It came from the last push down to see a new higher price. And so now I can either grab this high from this low before that broke, or I can refine this as in where is the area where it has a inefficiency. The inefficiency lays in between here, and there you go. And within that inefficiency, we can refine that to this candlestick in here, and look how price just pulled back into your S&D zone, and within that S&D zone, it delivered to new higher prices. And that perfect. And you can see it's like it took out the liquidity off of this high, right? So again, it's like higher high, higher low, higher high, retrace into an S&D zone. That is where we expect a retracement into to take out the liquidity off of this high, because this structural high is automatic liquidity for us, and that's going to be an overall target. And we want to see how can we confirm in here to take us above, to take us or take out the liquidity that sits above that high to create either a new structural point or just to grab liquidity and just fall to the face of earth again. Okay, so let's leave that though. But let's just look for another example as a nice rally. And let's go back in time. All right, perfect. Let's just do somewhere in here. Okay. So as you may see here, consolidation. We have a breaks of structure off of that wick. Within that wick, you have a BOS, right? And within that BOS, you have the last down move before the up move, and that right there has been broken. This high has been broken, and where did this high come from? That high came from this down push to see the higher price. And so as you may see here, it's like we do have an imbalance in here. And within that imbalance, that is a valid demand zone. And within demand zone, it's like, again, I can draw these S&D zones, but it's like, it's not always going to come back down into an S&D zone. But the more it just continues going higher, as in breaks another structure, then these S&D zones, I can leave it there for the future. But again, it's like, I want to follow where is price heading to. And I just want to continue on taking price to the upside. Okay. So now that you have this breaks of structure, a new breaks of structure in here, that is a second BOS. And within that second BOS, this is the last down push that took out the liquidity off of this wick, right? And then start seeing higher prices again. Okay. And now, where did this high come from? That high came from this down push before the up move. So you can draw a demand zone this big, just like that. And now it's like you can refine this S&D zone using a fib, which is a fib retracement, and you can use the 50. Okay, perfect. Right at the 50. And what can I do within this S&D zone? I can refine my S&D zone where the 50 lays at, just like this. And you can see how price just came into the S&D zone, and we can trade off of that level to start seeing higher prices because we want to take out the liquidity that lays above here. And as you may see here, if I did enter in here, I would already take out partials off of this wick, and the second partial would be off of this high, and I could leave runners if I want to. But this is the main high that we want to target as liquidity. As you may see here, when price took this out, pulled back the bit, met a new higher price, took the liquidity off of that high, ran right back down, and then made a new high again. That's it for this video. Hope you got something out of this video. Hope you loved it. Make sure to subscribe, comment, like. What other videos would you like to see in the future? And we can go from there. Thanks for watching. Have a good one. Peace.